All right, what's up, y'all? Uneducated Yogi here with One Family Investing. Today, I want to talk about some things um, about the SoFi option that I have going on. As you can see, think over this way. Um, yeah, the percentage for today is looking pretty good, and I'm gonna get more into that. I'm also gonna share a stock with y'all because I haven't done that in a while. Uh, First, let's just go over the stock. Because the one of the goals of this channel is for y'all to start a what's known as a safe account for sure. The day trading that I'm getting to through also swing trading. So the swing trading and day trading, that's more of a riskier way of going about doing trading. So the first thing I want y'all to focus on is creating a safe portfolio, kind of like the public portfolio, which is doing pretty good today. Um, SoFi is up 104%. Genie's up 43%. Nike's up 39%, so on and so forth. The public portfolio, this is a safe portfolio. And ideally, you would be investing, a portion of your uh, check every month into this because when you do that, um, imagine if every month I put in my top three stocks until they each get to at least a hundred shares each. So now this is going to be big gains. I don't have a constant income like that because I started this through investors, so I didn't have some big income stream or something like that. But but you can see the power of this because since the beginning, I've been saying these stocks is good. And no matter what, I could have done this in any type of ways. No matter what, the overallness of these stocks right here is 24% positive. And then the ETFs down here, obviously we would have been looking at Destiny and it's not doing so well, so we wouldn't have kept putting into that. But because we have long-term view, we might have. Who knows? But for ARC, again, no matter what, if you kept putting, $50 a month, $20 a month, $100 a month, $300 a month, $500 a month into this, you'd be up 23.8%. So imagine that, right? So this is a safe portfolio, and that's what I'm working on, helping y'all build on this channel. So my man's Jeremy. He, if y'all remember Jeremy, that guy right there, that's Jeremy. So this just changed everything. He's talking about a lot of stuff. But remember, I go through these long videos. This will be in the description of this video. So you can go check this out if you like. But from today's video, he says we should get to a point to where we're investing a minimum of 1K a month. Okay. So he's saying we should be investing up to 1K a month, which, I can agree to that because, um, again, just like the example you saw, if we get to be able to invest 1K a month with obviously having like your emergency funds, savings, whatever, put aside already, um, that'd be awesome because now your portfolio with the dividends and the growth of the stocks, that's that can be a income within itself. Okay, and that's one of the points. These incomes, they'll be diversified with growth stocks, um, dividend stocks, and value stocks. So these are the different type of companies that we categorize when we're looking up stocks that we're investing in. And SoFi right now is a growth stock. Um, they don't have dividends, but ELF is the stock that I'm going to share with y'all right now. So yeah, 1K a month. Imagine that will be your income. It can be a monthly income depending on how your dividends work, and that's all future stuff though. But safe portfolio, remember that. That is the goal, a safe portfolio. So one that I shared this in the past, but I don't have ELF. I do not own ELF. This is not financial advice. So do your due diligence. But he's invested in ELF for a while now, and there's a bunch of companies, big companies that he mentioned in the video, that is actually seeing how dynamic ELF is of a company. So what we do is we look at companies that's on the rise, and we want to get in them before Wall Street gets in them. So when we say investors, we're talking about the investors that's not the big companies, because big companies, what's crazy is they get in these trades late. So we would invest in these companies before big Wall Street, because they wait until it becomes like more known to the public. So they'll still get in before the public, but it's like they're pretty public's right behind them, because that's when they start posting on the news and things like that. So what's important to understand is we get in before the stock goes too crazy. So ELF was, when we were viewing it, like even during those tariff times, like when things were on discount big time. I don't know, I think it was around $70 or something like that. And ELF is around $116 right now. So $116 ELF right here. And imagine if you got in when it was at $70, right? So keep that in mind. So these big companies, they see the value of ELF, it's a makeup company. And so companies, I don't know this company right here, I got to look it up. Apparently it's a big company, but they have a price target to buy. So like basically setting up a stop loss of when ELF reaches 128, they believe it's going to be in its bull run, basically. They want to buy it at 128 a share. So they have their price set for that. JP Morgan, and they went from 128 from 150. So they had it at 150, but now they're going, okay, well, man, ELF is looking good. So let's take it down to 128, because we don't want to miss too much of those gains from 128 to 150 where we would have been. So let's bring it down to 128. And yeah, so that's big. JP Morgan, JP Morgan. They went to 130 from 132, which isn't a big change, but they still went down. Every dollar matters to these big companies, especially when they're buying shares at thousands and thousands per share, per buy. Goldman Sachs, they raised theirs. They went from 120 to 137. So ELF is a good company. Again, I don't own the stock, but I trust Jeremy, and I really appreciate his analytical skills and his research that he does. And he's one of those trusting people. If I had a 5-star rating, if I One Family Investing's investor resource rating list. He'd be up there. He'd be 4 point whatever 5. He'll be up there. And Celsius is another company he mentioned. Again, I'm not invested in this company. I'm familiar with the company. Again, you can watch this video and you can see how he broke it down. I was trying to just get this video out, so I started to record, because it's more about this other stuff I'm about to talk about. But ELF and Celsius, so if you're watching this, you got some stocks that you can look into and start your safe portfolio now. Okay, so let's look at SoFi real quick. So the share, remember, it was a little iffy for when I bought, but I was saying we got to trust our process, and it's good that we're trusting the process. SoFi is doing pretty good. So this is SoFi, and the market opened today over here. This is the opening of the market. So SoFi was down here. That's when mine was closer to in the red, my option. But then it shot up, and then it became in the green. And I want to just talk about my support and resistance lines that I drew on here, because this purple rectangle right here and this orange line, I drew that way before it got over there. I drew it when this was back here, maybe right here, but definitely back here, because this is one of the main points. But I did a lot of different work that I didn't want to bore y'all through, but I basically went back in time and saw where I can, in different time charts, this is a 3-minute chart, but different time charts to draw these lines in, these support and resistance lines. And this orange dotted line is a not strong support or resistant line, because I drew this dotted line when this was down here, when the candlesticks was down here. So when it's below, the top line is the resistant line. So now it's a support line. Once it went up here, it turned into a support line. Now this is a support line. And what's funny is I saw something back here that I was like, okay, it's not a strong line, but it's a fight nonetheless. Because I remember I used the word fight. Wherever I see a fight at between the bears and the bulls, that's how I know where to draw my support and resistance lines. And I was like, it's not a strong one, so it's not going to be a big one, but it is a fight there. Where the big support line or resistance line that I was drawing was going to be up here. But then I saw I had like a range, so I drew the range in which, or a zone, that I was thinking that it was going to be in. And as you can see, it hit right where I was thinking it was going to be at, and it's fighting in between those two lines that I just, support and resistance lines that I drew. Okay, and these are the support and resistance lines of the indicator that I use. So, and they drew this one in after it got this far, but before they didn't have this. So I just want y'all to see how, if y'all keep following and paying attention to all the videos I'm putting out, I'm teaching these in each of these videos. Eventually we'll get to a point to where I'll mark out where everything is, but for now, you got to just go through the videos and you'll be getting these little lessons. But if you follow what I'm saying, you can get a big up on how to read charts, so then you can put in your trades confidently. Because now I have no worry. I have less worry about my option trade right now, because my break-even point. So let's go back. My break-even point is 24.22. Okay, so then we go back over here and we try to see, okay, where's 24.22? Okay, so this is my break-even point. And this is going 2 days later. Okay, let's see for these next 2 days. We want to get to this yellow line for our option. So right now, there's a fight down here, and if we go back in time a little bit, we can see like a trend. So all we're doing is we're looking for trends. Yeah, I don't know how to adjust this dang thing very well, apparently. But it's an uptrend, even in this short little bit that we can see right here. SoFi's been on the uptrend. Oh, that's why. It's all the way down here. Well, that's how much it's been on the uptrend. See? So if we go down, we can see more candlesticks, and they're way down there. So SoFi itself has been in an uptrend, which is good, but we got to watch out for it because there's always corrections, and that's where when I put in the option trade on the time that I put it in, it was, you know, not such a crazy good time because I put in at a time where it just recently went up. So we always want to wait a little bit for the correction. But then I lost a good game because we saw that watch list option trade that I did, and it was, you know, it went up, you know, 600%. So same here. So what we're looking for is it going to keep going up because it's doing good right now, or is it going to come down? But we still have potential of all of this. SoFi can still get up here because this is its recent high. So this, you know. Okay. So, anyways, go back to the chart I was on. So we're going to be looking for this to hopefully play around in here. It's only 12. Anyways, we have a couple more hours. It's going to play. We want to hopefully we see it play around in here and then break up. And then, you know, that make me happy. But also it can break down. And then these are the support lines that I have. So these are support because it is below the candlesticks. So these support lines that I have, I'm hoping it doesn't go past that. If it goes past that, then, you know, we can be going for back to its recent lows. So we want to go back to our recent highs, not our recent lows. So that's how our SoFi stock is doing, or option is doing. It's up $54.62, 62%. So the value is 140. Remember, I bought it at $72. So the returns right now of this would be $68. So we want to get it to 100% here. We want to get it to at least 72%. That's our break-even number. That's why the stock has to be 24.22. 24.22 is at 23.68. Once it gets to 24.22, this is going to say 72. That's what I'm assuming. Okay. And we want to get it there before our expiration date of 9/5, because as the time gets closer to the expiration date, we lose a profit. All right, so that's called the theta number. It's one of the Greeks, but as it gets closer to the expiration date, you see, even if it stayed at the same price, if it stayed at the same price today, it's worth $69. But if it was at the same price on the expiration date, it'd be a loss. Actually, it'd be negative. So we're going to take it out or roll it before we get to the expiration date. So yeah, it's really close to the expiration date. So I want to take it out as soon as I can or roll it out, meaning that I would extend the option because it's a good option, so I can extend it. Okay. So yeah, and this is the theta down here. Is the Greeks. It says theta. So this delta number, gamma, theta, vega, rho. This one and this one are my two important ones that I look at the most. This one, delta, tells us how close our option is going to follow the share. So, well, anyways, I'm not gonna go through. I'll go over that later. But theta, I just went over theta. Okay. So I think that's all I really want to go over. We're doing really good with the trade right now. I'm super excited for it. Again, a link to Jeremy's video is going to be in there, and I am currently checking out a a support and resistance class for y'all to, the easiest one I can find. The only support and resistance training you'll ever need. I'm going to put this in the description as well. So far, I've been looking at it, and he does pretty good with breaking it down and teaching it. So, shout out to Mind Math Money. But until next time, I'm going to talk to y'all later. And yeah, that's it. Love, peace, One Family Investing out, where we learn, we invest, and we make profit.